What's going on, traders? Andrew O'Connell here with Pristine Capital. It is September 21st. Oh my gosh, today was Fed Wednesday. For anyone that's been living under a rock, the market was up, then it was down, then it was up, then it was down, and then it just fell apart into the bell. We're going to go through Fed Wednesday. We're going to 75 basis point rate hike, how we're trading it. Let's dive in. S&P 500 finished the day down 1.74%. Our Nasdaq QQQ finished down 1.79%. Our IWM small caps, they finished down 1.53%. Our dogs of the Dow Jones were down 1.7%. The ARK Innovation ETF, it was down 2.65%. Look at these day ranges. So you can see these are pretty much showing that everything closed right on the ding-dong lows of the session. Volatility did expand, but look at the extent to which it did expand. It was barely anything. At one point during the session, the VIX did touch the 30 handle. I believe it touched it a few times actually. But to be honest, like a 3.06% expansion in the VIX when the market's down 1.74%, that's a pretty small expansion right there. The breadth was very weak. You can see we only had 19% advancers in the small caps. Up volume was only 12.6%, and our trend model does remain at a -1 reading. In terms of economic data, and just in terms of this Fed meeting, so what happened today? Well, Jerome Powell came out and said, "Hey everyone, how's it going? My name is Jerome Powell," and he hiked interest rates by 75 basis points, our federal funds rate. It's now within the range of 3% to 3.25%. And everyone knew that that was going to come, right? The market had priced in a 75 basis point rate hike. He also said, hey, this Russia and Ukraine conflict, it's bad. Hey, the economy is starting to slow. That's bad. These are all things that we pretty much all knew, right? I mean, I looked at the Fed statement and there was really no new information. The one thing that was new, however, was he did mention, hey, there's going to be a point in time where we're going to have to stop these rate hikes or at least slow them down. So to me, as I was reading the notes and listening in, it did seem like, hey, if there's any information, it's really Jerome Powell saying, at some point we're gonna have to slow down, stop, etc. So as I was looking at this, I was like, okay, this is a good thing. I mean, yeah, markets sold off. Today was day 25 of the sell-off. We had a little bit of a washout. This is all good. The market did end up cascading into the bell, however, and you can see this VIX futures term structure did invert. So you can look at this one of two ways. You can say, oh my gosh, the VIX futures curve is inverted. This is horrible. For me, I'm of the mindset that, hey, this sell-off, it's getting pretty long in the tooth. We all pretty much know the reason why it's selling off. This is nothing new. And so this is kind of like for everyone out there that said like, oh, there was no fear in the market or no capitulation. This to me is, okay, now we're in like the final act of this sell-off. We're getting to the very end of the horrible seasonality. The seasonality begins to pick up as we exit September. And yeah, I think this, to me, this really seemed like a capitulation event in the market. And if you're watching like the financial media or you're, just looking at market commentary, there's going to be plenty of reasons people can create to, justify, why did the market sell off? But to me, it just kind of seems like the market's been selling off for almost a full month's worth of daily candles. Today again was day 25. Do we really need like a big reason for the selling to continue on day 25 of the sell-off? Not really. I mean, that's the condition that the market has been in for the last, 4 or 5 weeks. So yeah, I think today was kind of like, it just seems like an exclamation point on the sell-off. And really that's interpreting it. I think it's kind of tough, to create like some new reason for the market. Sectors. Let's take a look at what we had here. Gold miners were up 0.34%. We had the cannabis stocks up a smidge as well. And pretty much everything else sold off today. Interestingly enough, blockchain assets, they only finished down 0.62%. So definitely look out for that blockchain group. What else did well on a relative basis? Consumer staples were only down 0.38%, but we did have pretty much like broad selling across the board. The solar energy sector as well was only down 0.53%. Early on in the session, the semiconductors were doing pretty well. They ended up finishing out negative 1.01%. Style factors. We had the high beta style factor. It did sell off down 2.17%, followed by the growth style factor down 1.73%. Now let's take a look. In terms of trades, what did we do today? Well, for the beginning of the session, I was barely even on the desk. I made sure to get off the desk. I went to the gym with a buddy. We hit the sauna after. It was pretty great. And I was just kind of checking in on the market periodically. I did end up taking a lotto trade at 205 as the market really started to cascade to the downside. I got these SPY September 21st 384 calls for $1.81 as a lotto trade. So, expiring that same day. I rarely ever trade those, but it really just seemed like the situation called for it. I ended up taking those off about 40 minutes later for $5.26. So that was a pretty nice winner. But for me, it was a pretty small trade. It's not like, I go huge on a trade that expires the same day. So yeah, that was kind of cool. And then what else do we have? I ended up rolling that trade out. I sold it, market pulled back. Then I entered the September 23rd 389 calls. And you can see here I risked the profits from the day trade I just did on SPY. So I kind of just said, let me keep this in the market, let me roll it. And I just took the profits and put them into this trade. As of right now, it's looking like, this one could be a loss. So if anything, this will just kind of wash out with this first trade. And that's all right. Then what else did I do? Other than that, I added to my ARK Innovation ETF December 16th, 43 strike calls for $3.80. So I have an average cost of $4.29. I think this is going to be a really nice winning trade for me. And again, I think right now these are marking, I think about like 380. I kind of forget. But yeah, right now my cost base is 429, and I think there's a lot of traders out there, they get like super worried, like, oh my gosh, I'm losing the trade. But for me, it's just, hey, this position I'm going to have on until December. So I'm really just going to let this one ride. Even though today ended up being a pretty negative day for the markets overall, we're going to pull up the chart in just a moment. I really think the thesis still stands that we're approaching the end of this sell-off. Take a look here. And if we look at the seasonality, just to illustrate, seasonality is pretty poor as you finish out September. And then if you can make it to the beginning of October, we get a seasonal bottom and the market has the potential for a very nice rally. So I'm not going to let like one negative day, because today, this really wasn't in my expectation. Hey, things will probably resolve to the upside. But I'm not gonna let one day of, oh my gosh, the market went down today, so that means the whole thesis into the end of the year is gone. For me, it's just another day of selling. I mean, at some point, the Naeem Exposure Index is going to come out. It's going to show how much exposure these active equity fund managers have in the market. What's that going to look like now after an additional sell-off in the market? It's going to be even lower. And here's the kicker. So we did start to get a rally in bonds. So this actually really helped me out a lot, where some of my equity trades, they ended up closing a little bit lower because of the market, obviously. But my TLT trades ended up, moving to the upside today. Those really served as a hedge for me today, which is good, even though the market was pretty weak. Now also, look at the volume that's coming into TLT. And look at all these green candles that are clustered. I do think we could end up testing this 20-day simple moving average in short order. We'll have to see what happens. Now, let's take a look at the bond futures. These were today. I can see that they're kind of consolidating in the after hours. This is one of the first green candles we've had in these 30-year bond futures in quite a while, and it came on high relative volume. If we look at the 10-year treasuries, we can see the same thing. We put in, a low. We reversed off that low, and we sort of put in. I guess we'll call this a doji, but yeah, I think the time to not get bearish is when we start to see bids coming back into bonds. In this sense, I really just think the equities are kind of like one step behind the bonds. And if we get some nice action in fixed income, I think that the growth stocks are soon going to follow behind. Now let's take a look. The big problem child for today was the US dollar. From the breakout. So that is definitely a negative for the market, and perhaps this is really the reason why the market sold off. Maybe not the reason why, but this is, the dollar and the S&P 500, they are inversely correlated. The fact the dollar just kept maintaining its bid, I'm sure it did not help the situation. The TRIN index also started putting in these very extreme readings. The TRIN index is going to get volume on advancing issues, relative volume on declining issues, and we were seeing that the decliners were moving on like over 2 times the relative volume of the advancers. So really just like hard and heavy selling that was occurring today. Now if you look at the VIX, let's see what we did. VIX put in just a big doji candle. You can see we moved all the way up to 30. We could not really hold that bid, and now we're back in range. And if we look at the VVIX, we're going to see something similar. Green candle, VIX is still just kind of range bound. So we're just not seeing that sign from the equity volatility market that like, oh my gosh, this is like, a blowout event just yet. So we'll have to see. And then in terms of some leading stocks, this is one of my biggest right here. As I look at Wolf, like, yeah, I mean, it would have been cool if this thing just broke out, hit 133 today. But I mean, it closed up 0.65% on a day when the market was really weak. So there's, tough to expect, anything better than that. That's pretty. Next we have Enphase. Enphase, my biggest position in equities. This one closed down 0.05% again on a day when the S&P 500 was down huge. So is this where I'm going to be like, oh yeah, market was down, like I'm going to flip bearish? No, I'm still just seeing some good indications in these leading stocks. What else do we have? Let's see, the Nasdaq. Nasdaq undercut these lows. You can see we closed, pretty much right out on those lows. Russell 2000 as well. We are getting pretty darn close to this VPOC down here at about 1742.9. And we have our Dow Jones, which is down ever so slightly in the after hours. So yeah, I think today was, you could see it as like a tough day, like, oh man, market didn't go up. But to be honest, like I still think that it's packed. And I gotta say, like, if now like the market, down almost 2% today, I am certain that there's a lot of players that are giving up. Like, I'm feeling some pressure. I know there's plenty of investors and traders that are just like, oh my gosh, I'm completely done. So yeah, for me, I've been doing this for quite a while. Sell-offs, they can be like this, where it's just kind of relentless. It goes for a little bit longer than you might expect. But for me, this is certainly not my first rodeo. For me, this is just kind of like, business as usual, little walk in the park. And, we always just have to wait until the next session just to see what happens. And really, this market's like a page-turning novel where you always want to see what's going to happen next. So that is what I am looking forward to for tomorrow. That being said, that about does it for this market recap video. Hope you'll enjoy the rest of your evening. As always, we will see you all tomorrow.